Hello, thank you for connecting to this live streaming. My name is Kimberly and I belong to the digital marketing team at Arcus Nexus. This is our first session of our series called What's Up with FinTech. And in this session, we will talk about a topic called FinTech user experience. And we will review how the user demand gave birth to the FinTech industry. And for this, I would like to introduce my friend and Interaccess company CTO, Dario Landeros. Welcome, Dario.
Hi, Kim. Thank you. Thanks for the opportunity to be here and talk about this topic, which has become really trendy lately, which is FinTech. And let me start by sharing my screen over here. Okay, so let's start with what is FinTech? The main concept, FinTech and UX, right? UX is the short for user experience design, and you can find UX or UED in most cases, and it's basically the process of enhancing the customer satisfaction and loyalty by improving the usability and the ease of use of your product between the customer and your product. That's the main concept behind UX or UED, and it relies on the feedbacks that your product provides to the end user. Basically, it's very important for them to feel secure and specifically know when something valuable is happening with the software. What are the elements of UXD? The main elements that we can identify on a user experience is the visual design elements, the information architecture elements, and usability elements. What's visual design? The visual designs represents the look and feel of your whole product or service, which basically means it lets you, it's very important for you to have one product that looks and feels unified across every single view or screen or web page or however you want to call it, but give the end user the feeling of being inside of the same application. And what's information architecture? It's basically the process of structuring and organizing the information in a way that it supports usability and findability for your end user or the product consumer at the end. And what's usability? Usability, it's how good a product can be used by the specified users to perform tasks with effectiveness, efficiency, and satisfaction. Why are they so important? Well, there are a few things to consider when we want to explain to you why are they so important. The first thing is it helps you to figure out your goals by knowing your client, knowing and understanding exactly what your clients want at the end. Number two, it helps you to figure out your audience by letting you know what the user really needs and what to expect from your product. Number three, it helps your organization and the content creation, since you get the most important information about the needs and expectations of the product. That way you can present information that it's very important to the end user. Number four, it could help you save money. How could it help you save money? Well, because if you do a good research, it will save you time and it will help you to have a better planning for developing future list sets. And number five, it could help you to make some money. How it will help you to make some money? Well, if you did a good research, then if you have a good planning, then it will absolutely give you better results at the end. What are the skills that UX designers should have when creating this context or this information? Well, there are a lot of skills that you can look for. And over here in the slideshow that you could see on screen, here are listed some of the topics that will be very good that you UX designer take into consideration. Like it has to be a computer science person. It has to be related to the computer science. It has to have marketing knowledge, branding. It has to understand psychology a little bit. So there are a lot of different topics and concepts that are very important when dealing with something or creating content like this. What are the main features of UX design? Well, basically, the main thing that you have to consider when creating UX is giving your user feedbacks. And the feedbacks allows you to communicate the results of any interaction between your client and your product by making it visible and understandable. Feedback tell your user whether or not he is moving closer to accomplish a task or achieving a goal. It can tell them if there are errors occurred, and if so, what about those errors have gone wrong. Feedback can be attention grabbing or should be attention grabbing, and there are such different ways to do it. It could be via a model alert, a dialogue, a cover and screen, or even some just little icon badge like we are so used to on smartphones these days. The feedback helps the user to go through the process through the steps in the process while warning them if something happened of the regular process. Let's talk about a little bit how UX and fintech are related. Number one, fintech focus on solving problems instead of banking problems. Traditional banks and financial sectors have been playing catch up for many years. Nothing much has changed in the last 20 years. Bank managers are not embracing changes for new technologies. Some people might disagree, but saying that banks has come a long way these years, but in real improvements that were done in favor of banks than customers. Online banking has reduced the need for regular branch visits, and it has changed the way we receive banking services, but not the banking model itself. Online banking probably wouldn't be happening if accountants wouldn't notice the maintenance cost of online banking systems is less than branches. For banks, moving along was strategic and was a beneficial move. Just because you are on the web doesn't mean you understand it. On the other hand, fintech products do understand clients better, and they have built a strategy around that. That's the main difference between the traditional banking services and fintech services. Number two, people mistrust traditional bank services. For some people, dealing with the banks can be really hard, but without them, it will be brutal. Banks are needed. Banks are not going anywhere. They're not going bankrupt or disappearing, but almost everyone agrees that they need to embrace changes. Almost every single person has had a bad experience going or walking into a bank branch. The majority of established banks already have platforms to deliver new services. Challenge is in the exploitation, the ability to shift from product-centric thinking into more customer-centric thinking. It may challenge traditional banking operating models. It might require of some IT skills. It might require of some UX skills. And the product should be delivered by teams that understand finances services and to understand that the consumers will be happy to pay for those services. Today's digital customers have higher expectations than ever before. To be successful, companies need to get to innovate approaches to attract and retain customers through highly relevant and personalized experiences across multiple channels. Although customers now have the freedom to switch banks more quickly than ever, it's the job of the banks themselves to unlock all those added services and ultimately put the customers firmly at the center of the way they do. Having great online services designated toward users is a positive step towards this goal. Number 3, the fintech revolution was driven by brilliant minds that came together and create services where banks struggled during the 2008 crisis. The fintech revolution started just during the last financial crisis in 2008. Previous finance sector employees who lost their job, they weren't really ready to give up on finance. They team up with IT professionals and start creating fintech startups that were solving problems instead of banking problems. Due to the crisis, trust in traditional banks was damaged and everyone was eager to save and manage their money. This was a huge opportunity window and the new finance-oriented services start booming. So, what is fintech UX then? Well, fintech innovators understand the real struggle customers face when they have to interact with bank services. Those startups start splitting banking services into separate and mastering at least one of them will grant them to recognition and maximum customer satisfaction. This is where banks has failed with their online services. There are also so many of them or none of them are perfect. Most of them are overcomplicated and confusing. Some fintech startups have the vision that traditional banks lacks, and this vision is user experience oriented vision. Number 2, online bank services were not reliable, and the fintech innovators took that opportunity. During the fintech revolution, it brought us a better finance management tools, mobile payments, crowdfunding, fast loans, peer-to-peer lending, etc. We all have played with fintech products lately, like PayPal, or it might be even your bank offer a fintech product by letting you send money to your families. All this was done by brilliant minds that came together and created services where banks struggled before. Fintech innovators understand real struggle customers when they have to interact with bank services. Fintech UX future. People think traditional banks will disappear. Bill Gates said that banking will always be needed. But banks, as we know, could easily disappear, and fintech is all about winning changes and everyday finance improvements. In 2015, venture capitalists raised almost 19 billion US dollars to support the fintech revolution. With the 5 biggest banks controlling nearly 15 trillions in assets, 19 billions might look like peanuts. Anyway, fintech trend is only growing stronger, and for the worse, it's attacking most profitable sectors of banking. The use of Bitcoins and other digital currencies. Bitcoin and other virtual currencies are on a tear this year, surpassing the returns seen in stocks, bonds, and most other investments. The price of the Bitcoin has tripled since the beginning of the last year, surging above $3,000 for the first time in the history. Meanwhile, the amount of cash in virtual currencies has ballooned. The market cap for cryptocurrencies is now more than 100 billion, up from 20 billion at the beginning of the last year, according to cryptocurrencies tracker coinmarketcap.com. The incredible accessibility and inclusion that people using fintech will have. According to the World Bank 2014 Global Findex, the world has more than 2 billion unbanked people. Countries in Asia and Africa have some of the highest rate of unbanked populations. In Asia, the rates of unbanked as a percentage of the total populations are 21% in China, 47% in India, and 64% in Indonesia. As a comparison, the US unbanked rate is around the 6.5%. The unbanked are those who don't have traditional bank accounts or access to any bank services. They struggle with the lack of money, meeting a bank account requirements, high banking fees, and generally distrust the banking system. But another reason why they remain unbanked is because the banking infrastructure is less widespread in many developing parts of the world. Bank branches and ATMs are sparsely scattered only in large towns and cities, making daily access really inconvenient for them. Fintech innovators are well aware of these challenges and have been creating new solutions to serve this very large market. Many of these companies have drawn large user bases and decreased the level of unbanked populations in their regions. The innovations are centered in two major areas. Now, the new generations will push to adapt to fintech. 43% of the millennials find that it's easy to set up an account with a fintech mobile app, rather than a checking account walking into a bank branch. While older generations prefer more the personal interaction in bank and the non-trust to digital solutions, the millennials prefer not visiting a traditional financial institution, as they consider it time-consuming and do not even trust the financial institutions after the financial crisis. Investors have their eyes on fintech startups since they are more affordable. It's becoming clear by the day that the change is coming. And fintech companies are the latest fraud because causing a disruption to conventional financial services. Whether it's the public distrust of banks or the increase of use of technology, we don't know. But there's definitely a shift. According to a recent McKinsey report, fintech companies have received 23 billion in funding over the past 5 years. That's more. The level of investment is increasing this year. However, startups in general are usually risky since almost 90% of startups fail. Investing in startup is a bit like investing in penny stocks. The returns could be amazing, but the risk is also really high. Plus, you have to think about people's apathy toward trusting their money to an online company, which puts fintech companies into a very difficult position. With this, we end up, or we summarize this screencast. Let me go back and, oops. Okay.
Well, I'm back. On behalf from everybody at the digital marketing team from Arcus Nexus, we thank you so much, Dario, for participating in this first session of our series called What's Up with FinTech. Thank you so much. And thank you for the people that could watch us in this session. And I hope you can make it to the next one. You will be receiving information very soon. Thank you so much. See you soon.